is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 3 p.m. Eastern Time, and we got some Monday trading out here. Excuse me, did I say Monday? Yeah, we're talking about Tuesday. Just that quick, man. Feels like this week is flying, but not Monday anymore. Yesterday, we pulled back a bit. S&P's right now, we pick up in positive territory. We're up by 21 points, and we got a little two-way chop today. But markets, nonetheless, higher territory, getting led higher by, you guessed it, tech stocks. NASDAQ 100, we're up by 0.9%. A little bit of a sell-off intraday. 25,670 is the high, and we're right back up at that level. 25,623. NASDAQ 100 up nearly 1%. Dow up about 0.5%. 47,594 up by 240 points. And the Russell up by 8 points, or 0.3%. 2481. One of the biggest worrisome areas of this market has been crypto, and we're catching a little bit of a bid. Bitcoin up by $6,400, up by 7.5% to 92,195. How about Ethereum? Up by almost 10%, up $255 to 3,020. We jump to yields. You get the 10-year. Let's see where we're at right now. We're pushing almost 4.11, and right now we're sitting with all the way back to 4.09, okay? Yeah, as we've risen a bit from 112.22 to 112.29, 7 ticks off the low, but we get the 10-year at 4.09. 4.09, the yield on the 10-year. You jump over to the dollar. And, man, we got some action right now in the dollar. A little bit of weakness. Trading back as yields ease a bit. So when you had yields rising, right, from 4% to 4.11, you have the dollar strengthening from 90 to 90.50, essentially. And, yeah, as yields have eased a bit, the 10-year almost back to 4.08. The dollar's back a bit. And gold's holding up pretty well. We're down by $46. We're well off the highs of $42.99 hit yesterday. You hit a 4,100 handle briefly on that acceleration. 41, what's the low there? 41.94 on the dot. We're trading right now at 42.28. You check out the daily on the metals. Okay, now, you come in on Friday's half day. Very little volume, but that was a nice bounce. Look at the volume you did in gold. 223,000 contracts. Big numbers. You are coming into the November acceleration where you had 300,000 plus. So you trade above that area in gold. You have a little bit lighter volume, and today you're going to get some selling. We're down by $46. You jump over to silver. Silver's so strong, man. Look at this silver chart. And so I just looked, again, to see for silver versus gold, right? You check out gold. And you see the volume, yes. This is Monday's volume, okay, and Friday's. But pay attention to that one. And then you look at silver, right? And look at that volume yesterday. Okay, you make all-time highs. You blow away anything we've done in volume. Now look at the volume we did in silver, 138,000 contracts to what we were doing in November, 125. Now you did break above that area. No, on the Friday, okay, and you didn't have volume, but that was a half a day as well. So to have that type of volume on November 28th. That was the Friday, right? I got to make sure. Yeah, tremendous volume. Look at the volume silver had on that half day in the market, and then you break it on all-time highs. And today, we're only down by 17 pennies right now. You're down by less than 0.3%. At the same time, you got gold down by more than 1%. Excuse me, some of the silver stocks. Look at First Majestic up by 1.7%. Now, Endeavor, yeah, this one's catching a bounce. And you're going to see this happen as these equities catch a run. Now, they pushed out $300 million in convertible notes. It was yesterday that they pushed that out? Yeah, $300 million private debt offering, convertible notes, and the company expects to grant the initial purchasers an option to buy an additional $45 million in notes. Okay, and that's going to be used to pay down some of its senior secured debt. It's a great use of the capital, okay? They take the equity in the company. It was just trading at $3. You're all the way at 10. You say, I'm going to take some of this equity. I'm going to pay down the secured debt. It's one of the things you bump into, especially in the metals market, when you catch this type of a run. So Endeavor, we touch that 10 area. You do that, you're down by 2.4, but the silver stocks, man. First Majestic, Endeavor. Look at Hecla. Hecla up by another 1.3%. Silver is strong, man. Jumping back to silver. That volume yesterday, just blowing it all away. Now, you do have October volume. And on many of the equities, you have an October volume. Just jump around. Yeah, some of these. There's AEM. Let's check out. I was looking at the gold stocks today. Let's put it on a weekly. Yeah, look at Harmony. Harmony's still trading at almost prices you were trading at in April. Yeah, like check this out. AEM, right? You get all of this volume at those previous highs. Okay, we haven't done anything like that for the last 4 or 5 weeks in November. We were doing an AEM, 15 million almost every single week. Now we're doing 10, 12, 11, and 7 for the holiday week. But guess what? We've already done almost 4. But a lot of equities. We're going to be coming into it. We are coming into this huge area of volume in October, but silver is looking strong. All right, we jump around to some equities. So it just gets better and better for Warner Brothers, man. They're all bringing it. So Netflix's bid was all cash. Now it comes out the Comcast bid. They want to seek to merge NBC Universal with Warner Brothers. That's their deal. Yeah, Comcast on Monday made a renewed offer for part of Warner Brothers. It would give it control. Warner Brothers would receive a combination of cash and stock. Comcast among 3 going for it, with Netflix, Paramount as well. Paramount Skydance, of course. Paramount up by 1.3%. Netflix shares right now up by about 0.3%. But yeah, Warner Brothers, man, everybody wants what they got right now. Quite a run. Imagine, double what it was trading at when those talks began, and pretty remarkable. Time flies, man. 3 months this has been going on. Doesn't feel like it, right? Those deals, that news started beginning of September. Yeah, 3 months almost. Wow. Warner Brothers up another 3.5%. All right, folks, stay tuned. We got our man Basil Chapman. He's growling and prowling in that tiger's den. He's coming up next. Always a great conversation with Basil. Stay tuned, folks. Check out the opening call on the front page of TFNN.com while we're waiting, and we'll be right back with our man Basil.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got markets right now in the green. And right now, as we do each and every Tuesday at 3:15, folks, we're going to jump over to our man, Basil Chapman. You can reach Basil and talk to him every trading day, listening to his program, the Tiger Technicians Hour, every morning, 10 a.m., right after my program in the morning. And the opening call, as I said, folks, right on the front page of TFNN, Basil's outstanding daily newsletter. Okay, you can come on over to the front page of TFNN. You hit that subscribe button. You can sign up for $149 for a month, $695 for 6 months. You save almost $200. Or if you want to go for the year, it's $1195. You save over 33%. You save $593, and they all come with a 30-day money-back guarantee, folks. So I encourage you to think about the 6 month or the year, because I don't think you'll be disappointed with our man Basil Chapman. Basil Chapman, good afternoon. I'm doing well, man. How are you? You just cut in there a little bit, but I got you now. How are we doing this afternoon, Basil?
I'm doing well, thank you.
Good, good. So, what do we got going on in this market, Basil? We got a little bit of volatility, and we are only 100 points away from the highs in the S&Ps right now. What do you think?
Well, this is very interesting because we have really a very strong rotational market here. We've gone into a lot more, certainly for, I've been raising cash for subscribers for a little while. We had some really outstanding, crazy positions that were in things like Symbiotic, which is now down, suddenly got downgraded, but we had huge gains in it. We took that money off. We tried to get a little bit back again today, and got taken out for about a 3% loss, and it dropped even more. It dropped, it's 18 points lower. So I'm being really careful. I've tightened stops and anything. But what's really fascinating is we got long on the Dow, just off the low, and we've added to our position that was started in April. And so we're long, and we're trying to get a trading long. Besides that, we're trying to add to it via the UDOW, which we do have 3 times long. And the reason is, you can see this daily chart. I like to look at the 9-period exponential moving average. It crossed positive. That's a good sign. The MACD has crossed positive. That's a good sign. The relative strength is a little gray. Let me just get the pointer working. The little gray line right here is doing very nicely. The stochastic, though, is a little disappointing. It's at 64%. I'd like to see it at 80% or more, but that gives us a little opportunity to say that if the Dow starts as leg B, that's above 47,571 in the next 2 days, that would be a very good sign, because I think that's when the stochastic will start to rally. But look at the weekly charts, and I've been talking about this for ages. The weekly chart, the 9-period moving average is still very strong, and look, the price is holding so well. So I have to consider this is a big positive. And if I look at the monthly chart, This is still a leg A. We have the whole of December to see whether we break above 48,431, the all-time high, to continue leg A, or if it fails to do that, it makes a peak A. And the Chapman methodology, let me just get to this real quickly. We like to identify the lowest low bar, then count each successively higher peak. There's usually a good chance that when it goes to a peak A, and then it starts the leg B, that you've got a buy signal that's probably going to be upgraded to a buy mode. The objective is to always get to 4 higher peaks. If that's the case, then the monthly chart is still only in leg A, and that means you can't. It's basically a 7-way form. You get to leg D, the 4th highest peak, where you got to be careful. That would take. This is the first month. We still have to have 2 down, 3 up, 4 down, 5 up, 6 down, and then 7. That takes you into halfway through 2026, and that would imply that every other month makes a new high. So that's that. So we're looking at this is very positive. The other thing is we've started to add to positions. So we've got some conservative positions. I say conservative because, look, we bought General Motors. I'm not sure just how high it can go before it has a bit of a pullback. It's at an all-time high right now at 73.70. This is I'm going to say it again, General Motors. I mean, who even talked about General Motors at highs? It's just with the economy and everybody talking about interest rates, etc. It's amazing that it's doing this well. Also, we started a position in the IWM just off the low, quite a bit off the low, but we're in it now. We're long, and I'm anticipating that there will be catch-up in the Russell 2000 at some point. So this is a very different portfolio to what we've had before. The concept here is that we're going into the old fuddy-duddies. Look at this, Alcoa. This is Alcoa, a cyclical stock, doing so well. It's up, it's at 41.56 from the 35.17 low just a couple of weeks ago. And this is deep cyclicals, aluminum. So I'm looking at different things in this particular phase. And I'm really, we're still in our Bank of America, but I'm thinking now of adding more contemporary banking shares. I don't know yet which ones, but look at it, SoFi. This is SoFi. They call it SoFi Technologies, online banking, financial solutions. Look how nicely it's doing right here. So this is a different portfolio, and within the context of what we're looking at. Oops, I went to the futures. I just wanted to show you something here in the daily charts. So I had spoken to you about this, and I said that I believe that we're getting some kind of a low, and that I like to look at it as if it's an earthquake and an aftershock. Every once in a while, we get an internal low without the residual low. That means you've got a V-shaped recovery. I don't know if this is going to be. This is the Dow chart right now with the yellow background, and I use this every other time. It's got internal high, residual high, or internal low, and then slightly, just a little later, you get the residual low. This is a fabulous move to the upside. So I'm kind of impressed, but it's actually a lot more selective than one would think looking just at prices. So within that context, it's important to kind of figure out that for instance, let me just show you this here. This is Iran. This is a stock we're still in. We've taken really good profits from this. Let me just get it right here. And we're going to try to get back in. We were in the 22s, and it screamed up to the 78, 76, 88 level. Now it's down to 43. I'm just watching this closely, and this is data centers, renewable energy, GPUs. I'm just looking at this and saying, are they kind of done right now? Is that why we're rotating into all these other areas? I mean, look at this. Here's Walmart. This is, I call these fuddy-duddies. This is the old school, all-time high. So this particular phase of the market moving up right now is very different to what we've seen before. I have still kept our core mining. It had a fabulous move, but I'm impressed with silver, the way it's rallied, and it's kind of led. It was at an all-time high yesterday. It's just below that. It's in leg C. It should go to a D. So gold and silver didn't give up the ghost. They've held very well. It was a very sharp pullback. It doesn't look like it now, does it? Look, from the 20th of around about the 20th of October, look at that sharp pullback. But now it's gone much higher. So I'm thinking that This is where you have to be much more selective. But I'm also looking at now single digits for subscribers. I now want to start adding some single digits stocks that are showing really good signs of having strong moves. There was one that I mentioned today, but we didn't actually get into it because we were following it. Here's a stock, hadn't heard of it before, Smart Sand Inc., fracking sand, mining, logistics. Look at this fabulous move. Just today alone, it's up almost 6%, and it's only in leg C. So I'm looking at and it's at $3.40. So I'm looking at now low-price stocks to add to our portfolio for subscribers because we've got some biggies and they seem to be working now.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Oh. All right, forgive me. Somehow I got muted there. I didn't realize what happened. Apologize. Okay. We got the S&Ps up by 25 right now, and right now, folks, we're going to jump from our man Basil to our man Tim Ord. And, folks, we talk to Tim Ord every Tuesday and Thursday at 3:30. You can reach Tim at his website, ord-oracle.com. And don't forget, head on over to the front page of TFNN, right under the Services tab. You'll see a couple of great webinars, among the many others. The Secret Science of Market Tops. And I tell you what, that's all right. They're getting them online, folks. Al's getting them online. You let me know when he's ready. I'll tell you what, we'll keep everybody in suspense. Tim's coming on in a second. And while you get him ready, I was going to mention, Basil was talking about the Dow, right? Great stuff. Go check out the opening call, folks. Outstanding service from Basil. He puts out updates every day. He puts out an hour-long webinar each weekend, okay, that he sends to subscribers. That's an archive webinar, basically. He puts out a video about an hour-long, Basil does. But, yeah, I found myself saying, you know what? This Dow, man, how about that? You're talking about a leg A on the monthly. And what's going to power that higher? Well, you look for some of the rotation. And guess what, man? Look at Boeing, right? Boeing's got a lot of way you could go. We're talking about Boeing right now. Now, today you're up by 10%. News on Boeing has higher deliveries. They see the Spirit Aerosystems buyout set to close in 2026. We got everything going. Now I got rings going on the phone and everything. All right, let's jump around to some of the equities. Jump around to NVIDIA shares. So we had some selling back there following their earnings, man. We get a bounce off the lows last Monday. Tuesday, that is. Low volume on the Wednesday and the Friday. A little bit of a bounce yesterday, but look at that bounce yesterday. Nothing compared to what we had been doing on NVIDIA shares. And when I talked to our man Basil, he's talking about the Dow and the rotation. One way that the Dow could overperform here is just NVIDIA alone underperforming. You talk about, you look at where NVIDIA is in terms of NVIDIA, only $181 company when you're talking about a price-weighted index, and then you jump to something like Caterpillar's $584, right? The outsized impact of some of those equities in terms of what they trade at. Home Depot, $354. So, yeah, that impact on NVIDIA much smaller in the Dow. All right, folks, and right now, we're going to jump over to our man Tim Ord. Check out his website, folks, ord-oracle.com, and those two great webinars under the Services tab at TFNN, The Secret Science of Market Tops, and the 6 Secret Ratios every trader should know. Tim Ord, good afternoon.
So let's jump in it here. We had a little technical problem, so we kind of wasted 4 minutes. But we got the charts up, right?
Yes, we are good. Let's go for it, Tim.
All right. So October. Let me get my drawing tool here going. All right, October, which is this month right there. Hit a higher high on higher volume. You can see that volume's higher than, I don't know, the last 6 months or better. And in November, we didn't touch that high, and I thought we might. So it doesn't matter what the volume was on October, because we hit a new low on actually lighter volume. That was bullish. We would not touch a new high. So December, I think we're probably going to touch a new high, and volume's going to have to be at least 1.78 billion shares, ideally, or more, because once you test a previous high, if volume drops 10% or more, that previous high is going to be resistance. If you test a previous high on about equal volume or preferably higher volume, that previous high won't be a resistance and market continue higher. So you can think volume more or less is just energy. So the more volume it has, the more energy it has, and you should move higher. If you look here on the bottom, the VIX, even though we're close to the highs here, the VIX, relatively speaking, you were right around 16.5, and that's not rising. At least, and it may not, and that's ideally going in, if you're up against the highs and the VIX is not rising, usually that's a bullish sign. So, but this is a monthly chart. You can't really see the inner days, but I'm thinking at minimum, we are going to test the October highs, and the October highs will be proof of the pudding, what happens next. This is a weekly chart. I wanted to point out too, a lot of times when you touch the upper Bollinger Band, this one we did right there, a lot of times those are resistance. The Bollinger Band is actually still rising. It's a little bit above the October high. So even though we go back to the October high, which I think we will, most likely this month, if not in January, but yeah, we're going to, at some point, going to test that October high. We tested on higher volume or at least equal volume, that rally should continue. So you need a test of the October high. VIX is not really saying much, it's staying low. We had a big spike in the November low. To me, that was a selling climax. And that's the kind of exhaustion move to the downside. Now we're having a rally up and kind of moving along here. This is the daily chart. We're kind of going sideways right here. We're up 5 days in a row going into last Friday. That predicts market will be higher within 5 days, 83% of the time. So even though we're not backing away from the highs, we're kind of just chewing up time here. And we hit the gap. The more times you test the gap, the more times it goes away, I guess you might say. So we're not backing away from that gap. That means we're probably eating through it, and we're going to take a shot at this October high. So how that works out, a lot depends on volume. I had the DBT up here, Zwag Breast Thrust Indicator. I guess I didn't put it back up. But I think it was last Thursday or Friday, it hit 0.38. Then on Friday, I think it went to 0.4 something, 0.42 or 3. And that triggers the Zwag Breast Thrust Indicator. The Zwag Breast Thrust Indicator is kind of an advanced decline type thing. And it's kind of once you have a selling climax, you should see a sign of strength off of a bottom, either volume-wise or advanced decline lies, or both. And the ZBT has to go from 0.4 to 0.6 in 10 trading days or less. And 10 trading days comes in Friday. And right now I think we're on 0.54. So we have a shot at it if the market continues to rally here. I hear the music.
All right, folks, we're going to come back. We'll talk. We're going to finish our conversation up with Tim Ward. We'll talk some markets. We'll talk some metals. We'll talk some gold. Stay tuned, folks. We're coming back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We're talking to Tim Ord. Remember, you can reach Tim at his website, ord-oracle.com, and those two webinars right under the Services tab at TFNN, folks. You check out those webinars, each $149, and once you buy them, they're on your members page. You watch them as many times as you like. All right, and I see a little inflation, deflation up there, Tim.
Right.
Where are we going to next?
Actually, we're going to skip down a little bit because I want to cover this. This is the commodity index. GSG. This chart goes back to 2009, and this is William O'Neill's cup and handle thing, and you kind of have to visualize it, but this is the cup, and this is the handle. And how this thing kind of works, the narrower that handle is, the more bullish that pattern becomes. And if you notice this, from the low of 2020 up to the high of 2022, it only retraced about, it did retrace 38.2%. That's it. That's a real narrow retracement. That shows, so every time the market fell back, there were buyers. And now the Bollinger Bands are just starting to squeeze a little bit. And they're actually starting to expand out. At the same time, they're kind of expanding out. If you look at the volume right here, over the last 3 months, thereabouts, the volume's been increasing as those Bollinger Bands are starting to spread out. A lot of times, if the market only traces 38.2% retracement, a lot of times that's at least the halfway point of the next move up. So I'm thinking this stock is probably going to double. We got some resistance back in 2010, 2000, back in here, but I think we're going to go back to the top of the trading range, around 40. So this is commodities. There's a lot of, you got oil, you got metals, gold, silver, anything commodity related. This chart, anyhow, it's a commodity chart. So the commodities are going to go up, in my opinion. This is really a bullish graph. I own it. So even though the stock market, the equity market actually looks fine, I think next year is probably going to be another up year again. It's kind of like surprised this year was up this much, but the market's making a little bit of a switch. I think some of the energy out of the equity market is going to go in some of these other markets. Gold is one. The gold stocks is one, which I think gold stocks will outperform the NDX stocks over the next, I think, actually several years. And this commodity index is going to outperform going forward too. And a lot of times this halfway point right here, again, is a midpoint, and you should see something that'll look like this on the next move, pretty much straight up from 2020 to 2022. So I'm thinking we're just going to go straight up to a 40 over the next, year or so. So an impulse wave comes after consolidation phase, the impulse waves come. Well, this consolidation phase on GSG, in my opinion, is ending or near an end right now, because we're starting to see volume to pick up to the upside. It really hasn't performed really good. Well, it hasn't performed very good at all since 2022 has gone sideways, and it's a narrow sideways trend. So I'm thinking this GSG is pretty much going to be explosive. But I bet a year from now, I think we could see a double. I don't know, or close to it, or somewhere in that vicinity. So that's
a pretty
that.
cool chart.
Cover that.
Thanks, they're bringing it. I think they got like $1 billion. I was looking up that ETF as you were talking about it, but that's a pretty cool chart, man. And yeah, not a bad pullback at all in terms of some of the market volatility. And here's an ETF. The only pullback was almost 24 to 20, and I know we were well above and well below. But that's a cool chart, man. We'll see. Yeah.
Yeah, it's so this is a monthly chart. So I kind of always look at the bigger trend first. And if the bigger trend is bullish, then I start going down to smaller trends. But this trend looks really good, especially with the volume starting to show some signs of strength coming out here. So when's this going to break
Tim,
out?
I have to. This is so I try and look at the gold report, of course, right? And it's like I say to myself, pressure's obviously on the next Fed. The story's out today. Maybe Trump's going to nominate. He might have it picked. Maybe he tells us early next year. Nonetheless, we're getting a new Fed chair. Pressure's on lower rates. Maybe that's going to lead to a little bit of pressure on a weaker dollar. And, that would help commodities too. Just giving you a little, as I look at this, I'm saying this is quite a setup here when you come into, anyway, as those line up. Just something that I'm thinking about.
I'm thinking he's going to pump everything up.
Right.
Which is good
I
for
say
the
the only
short term,
risk is that it runs too hot, but that's not a short-term risk too. So that's what it's like. You run it hot. Hey, you run it hot, and then they can always hike it. I get it, right? And so you run it hot, man. Let's run it hot, and if you run it hot with low rates, though, we might get a weaker dollar. But guess what? You get a weaker dollar, everything else becomes more expensive when it's priced in a weaker dollar. So hey, we'll see what happens.
What I'm thinking, this is actually going into 2000. And 2000 led to a huge decline. So I think Trump's not going to my opinion, Trump's not going to let this market decline. I think he's going to kick everything at it to keep it up. And so, when he gets out of office, I think that's the time where things could be ugly. But that's 3.5 years away. So we'll see how it goes.
I agree a lot, and that's hey, you run it hot, man. There's risks on both sides. So I get it too. I do in terms of there's risks on not running it hot, right? That's what he wants. It's like okay, and then you look at the debt right now. I say this all the time. It's like well, the risk of running it hot is inflation, right? Well, that actually helps the debt. So I'm like, okay, that's a risk. And then so I'm like, yeah, maybe we'll just run it hot, man. And, boy, I can't wait for mortgage rates, car, it's big time. It is for sure.
Yeah, it's big time. There's a big change going. We had basically kind of a sleepy economy per se. It was okay over the last 4 years, but Trump walked in and he's doing, gold kicked off. And actually, here's another chart. This is kind of a momentum chart for gold. We've got about a minute or so. I just want to point out exactly where we are right now today. And this is momentum of up-down volume. Seems to work a little bit better than advanced decline on the second indicator up. So I pay attention more to the up-down volume. And once it gets up around 30, which we did here back in, October, I think it was. And previous times it got near 30 was 2016 and again in 2019. And when it hit, the rally still lasted another 5 months after that in 2016 and over about a year in 2019. So how long, before you get a consolidation, how long could this rally last? Well, right now it's still on a buy as long as this indicator stays above zero. So I'm thinking we may flip sideways here for a short while. Then I think we start making higher highs again because this indicator is not really backing off a lot. I mean, we're plus 15.5 right now. To get it bearish, it needs to go below zero. So even though it has backed off some, plus 15 is not a bad place to be. It could be something like that, kind of go sideways here. And so I don't know. It's not I do think a consolidation is going to happen, but this trend is still in the early stages, I think. So we're going to benefit from it. So
I like it, man, and I align with a lot of what you're thinking. I do, and those charts. Thanks for bringing that ETF to our attention. Those commodities, man, watch out. Folks, check them out. 2 great webinars under the Services tab at TFNN. Some of those ratios we talk about right here today, and then ord-oracle.com. Tim, thanks so much. We'll talk to you Thursday. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the 10-year right now, positive by 2 ticks. But we were lower. You got a little bit of higher price and lower yield pulling it back. We're at about 4.08 right now on the 10-year. You jump over the dollar. All right, the dollar down to almost 99 yesterday. You take a look at the daily. We rejected that 100 price point yet again. I was talking about this earlier today on the morning program, right? Now, what's remarkable is when the dollar moves, man, the dollar really moves. Okay, you talk about big moves. Well, yeah, how about a big move from 121 to 70? Okay, that was from 2000 to the 2008 financial crisis, right? From 2002 to, my goodness, the beginning of 2008. Okay, now I bring that up in that here's 2002. The S&Ps were at 954. The S&Ps went up 50% over that period of time when the dollar got trashed. Did you see that? Dollar went from 121 down to 70. The market was on fire. And that led us into the 2008 financial crisis when everybody was flipping houses on leverage they didn't deserve. Okay? Stock prices priced in dollars went up when you had a weaker dollar. Everything else was rocking as well. Okay? We have only been stronger than as we are right now in this dollar for this recency bias right here. That's it. Right? Everything else on this chart going back to 2002 is a weaker dollar. So it's one of the possibilities. And, I agree with a lot what Tim was saying, man. I think they're going to run it hot, and it might be. And you just want to be aware of the risks on the backside, because guess what? Don't sell all your assets, because you know what the risk is? The risk is that you have inflation running hot, right? You got inflation running hot, and there you go. Folks, thanks so much for tuning in, spending your afternoon right here. Have a great night. Have a safe night. I appreciate your time. We'll talk to you tomorrow morning for the Morning Market Kickoff.